Australia, a key U.S. ally, has surprisingly decided to pay China in yuan, not U.S. dollars. This signifies a major shift, hinting that American financial dominance may be fading. China, a major buyer of Australian iron, declared, "We are done with dollars. We will now pay in our own currency." China is pursuing a new path economists call de-dollarization, tired of U.S. sanctions and financial pressure. This means gradually replacing the U.S. dollar in global trade with China's yuan, aiming to make it the leading currency for international trade. Australia's choice to accept yuan was a clear political signal. Some view this as a dangerous gamble, others a smart adaptation. Over 30% of Australia's exports go to China. Rejecting the yuan would close the door on their largest customer, which their economy cannot allow. In Washington, this is a serious warning. U.S. global influence relies on the petrodollar system, reinforcing its power. With nations like China, India, Russia, and Australia seeking options, the dollar's supremacy is threatened. We are entering a new age of monetary multipolarity. The dollar's reign may be concluding. This shift did not occur suddenly. China has been preparing quietly for years. In 2010, under 2% of global transactions used the yuan. Today, that figure has surpassed 6%, according to SWIFT. This is a huge jump in global finance, especially as central banks cut dollar reserves, worrying Washington. China has also signed energy deals with Russia and the UAE and currency agreements with Brazil and Argentina, extending the yuan's influence. With Australia joining, it marks another crucial step in decreasing worldwide dependence on the dollar. This is a contest for global power. Every yuan trade deal sends a quiet message. We can prosper without the U.S. dollar. Is this China's clever economic plan or the start of a new financial war? Why would Australia, a steadfast U.S. ally, embrace the yuan? How will America respond? Are we nearing a currency and trade conflict? If the dollar weakens, what does that mean for us? Our savings, jobs, and economic future? We analyze global economics, market shifts, and financial news. Subscribe and join us as we follow this developing story.
Americans are looking beyond Australia to the wider consequences of global financial shifts. When a significant economy like Australia adopts the Chinese yuan, it suggests a possible domino effect. Nations such as Argentina, struggling with inflation and debt, could follow suit. China is actively encouraging them. Abandon the dollar. Use the yuan with us. Even Saudi Arabia and the UAE are re-evaluating their place in the petrodollar system. India, too, is experimenting with rupee payments for energy, diversifying global currency use. The US dollar, once the unchallenged global benchmark, is slowly losing its footing. This is a major worry for Washington, which depends on international dollar demand to finance its debts. In the past, the dollar constituted 71% of all global reserves. Now, it has fallen to 58%, indicating eroding trust in its stability. China is seizing this opportunity, forging partnerships, and providing loans without conditions. They are persuading countries to transact beyond the dollar's sphere, expanding the yuan's influence. A recent case, China and the UAE inked a multi-billion-dollar gas deal settled entirely in yuan, circumventing SWIFT. Experts view this as a significant test for a new, China-led financial network. Argentina, previously rescued by the U.S., is now being offered economic flexibility by China. China's strategy is not merely economic, it's deeply political, aiming for broader influence. It assures developing countries, "We respect your sovereignty. We are here to assist." This is why many nations in Africa and Latin America now perceive China as a collaborative ally. This contrasts sharply with the U.S., whose support frequently involves political demands. Nevertheless, the dollar remains powerful, involved in about 80% of international transactions. It is stable, liquid, and trusted by many, maintaining its significant role. But that doesn't make it unassailable. Australia's move is a clear warning sign. China is also advancing CIPS, a swift alternative for yuan payments, already used by Russia and Iran. Is the yuan a flawless replacement? Not yet, as it faces its own challenges. It isn't fully convertible, and China's strict capital controls concern markets. Still, countries including Brazil, Indonesia, and Saudi Arabia are incorporating the yuan into their reserves. This transition extends beyond finance. It's fundamentally about energy and its pricing. China has halted U.S. gas purchases, securing long-term contracts with the UAE and India. India now pays in rupees for its energy, further shifting away from dollar dominance. If oil and gas move away from dollar pricing, the petrodollar system might crumble. This would undermine a central pillar of American power and influence. All this indicates a new, multipolar financial era with multiple centers of power. It may create balance, but also instability, particularly for countries reliant on dollar-denominated debt. What is happening is more than just trade. It's a struggle over who dictates the global rules. And the effects touch everyone, from large corporations to individual consumers. Choices made overseas today could directly increase the cost of living tomorrow. Even Europe is questioning its dollar dependence, seeking greater autonomy. Berlin and Paris are now talking about diversification, and the European Central Bank is investigating a digital euro. In the U.S., leaders are recognizing that the post-World War II order is fading, necessitating new approaches. The dollar has long been a geopolitical instrument, used for sanctions or excluding nations from SWIFT. Now, China and its partners are constructing a rival system, offering alternatives. China's digital yuan is already being piloted in major urban centers, designed to bypass SWIFT, Visa, and MasterCard. This poses a greater danger to U.S. influence than any weapon, as it commands payment networks. Command over payment networks ultimately means command over world trade and its flow. Young economists in developing countries no longer consider the U.S. the only viable model. They desire equity, not necessarily Chinese leadership, but a more equitable global system. Even American analysts are questioning, is dollar supremacy benefiting us or alienating our partners? Inside BRICS, discussions are happening about a new currency, possibly backed by gold or commodities. This represents a genuine challenge to the dollar, rising from the global south, not the west. What we are seeing is more than a monetary change. It's a worldwide transformation of power. The rules are being rewritten, impacting every aspect of global finance. The competition isn't just between two currencies, but between two models, one based on control, the other on equilibrium. And we are all involved, whether in finance, retail, or education, as these changes affect everyone. Those who fail to adapt risk being left behind in this evolving landscape. This is not merely a crisis. It's a profound transition shaping our future. Our response will decide if it leads to a breakthrough or a breakdown in the global order. We explore global economics, market movements, and financial insights. Subscribe and stay updated as this narrative develops.